the last week webinar. I would strongly recommend that you watch it. If you have not watched it up till now, so you will need to watch it probably after now, so that you can have you don't want to miss any of the information that is important. So this evening we are having a seasoned finance expert who is going to be taking us through some of the things we want to look at today. And permit me to quickly take you through All right, so sorry about that. There is a bit of network challenge there. So he is going to be taking us through today, and we can get our notes and our pen ready so that you don't miss out on anything. Definitely, we are going to be having the recording of this session as well, but I want you to pay attention. In the next 30-35 minutes, he's going to be walking us through some of the things that are important for us to know about the new tax climate in Nigeria, especially if you are in business. Very important. So this evening, join me as I welcome Mr. Ogunbiji Bolaji. You are welcome, Mr. Ogunbiji. Hello, please, can anyone hear me? Am I audible? If you can hear me, please.
Yes, you can. Yes, we can.
All right, thank you. I get let me make him okay, Mr. Ogunbiji, you are co-host now. So please.
Yes, we can hear you.
Thank you. Hello, Mr. Ogunbiji, are you able to hear me at all? Please, just a minute, please. Let me just confirm what is happening at this end. Perhaps
hello.
Network challenge.
Hello.
Okay, yes, we can hear you now.
Good afternoon.
Yes, good afternoon.
How is everything?
So I don't know, maybe you had a bit of network challenge earlier. I already introduced you, and
Okay.
the floor is yours now, so you can go ahead, sir.
Okay. Thank you very much. Good afternoon, everyone. I hope we are having a great day. Like I've been introduced, my name is Ogumbi Ibolaji. Please, are you hearing me? Hello?
Yes, we
Yes,
can.
we can hear you clearly. We can hear
Yeah,
you.
yes, we can hear you. Yes, we can hear you.
So it's a pleasure being here.
No, no, we can't hear you anymore.
He's gone quiet.
Okay. Can you hear me now?
Yes.
Hello? You can hear me
We
now?
can hear you now. Yes.
Okay.
Yes.
I say we are looking at the Nigerian Tax Reform 2025, expectations and compliance obligations for business owners. This paper will be divided into production. Then we look at the 2025 tax reform, expectation and obligation as it concerns the reform generally. We all understand that the reform tries to bring a solid law as regard all the tax legislation that has been in operation in Nigeria before. So this reform consolidates them into 4 places. We have the Nigerian Tax Act, we have the Nigerian Tax Administration Act, we have the Nigerian Revenue Service Establishment Act, we have the Joint Revenue Board Act. So those are the acts that come out from this present 2025 law. So now, penalties. As a business owner with the tax law that has just been recent, one of it is that we as a business, we need to register with relevant tax authority. Failure to register with relevant tax authority, the penalty is 50,000 naira for the first month, then 25,000 naira for the subsequent months that the compliance is neglected. Secondly, as a business owner, we should not award contract to anybody that is not registered with tax, that doesn't have tax identification number. If we do that, the penalty is 5 million naira per infraction. So if you award contract to 10 contractors that are not registered with the tax authority, that means you are paying 5 million in 10 places, which is 50 million naira. So we need to take into consideration that. Then we should be filing our return. You know, we have annual returns, we have monthly returns, we have other returns. So if as a business owner, we be filing this return as at when due, especially the annual tax return, because at the end of the year, you're supposed to prepare your audited financial statement that will disclose your revenue, your direct costs, and your administrative expenses, which will now give you the profit that you made at the end of that period. So that document, your annual audited financial statement, is supposed to be filed with the tax authority. So if you don't do that at the end of the year, if your accounting year ends by 31st December, you need to file that return before 30th of June of the subsequent year that your account ended. If now your account ends 31st December 2024, then you need to file that return before 30th of June 2025. Before, it used to attract 25,000 naira for the first month, then subsequently 5,000 naira. But now, the first month that you defaulted is now 100,000 naira. Then subsequent month, it is 50,000 naira. So we need to take this into consideration and take our filing seriously. Then failure to keep record. As a business owner, we need to keep record of our transactions, both your income and both your expenses. So if you don't do that and the tax people come to you, provide us your record, and you couldn't give them any record, the penalty is 50,000 naira for a company and 10,000 naira for individual. Then denying access for tax automation. So if you deny access for tax people, maybe they want to do audit or they want to do anything, then you didn't allow them to your record or to your accounting system or to your computer system. Then the first day, 10,000, then subsequent, the first day, 1 million. If tax people come now, they say, okay, we want to do your audit. Please, are you people hearing me? Hello?
Yes, we can. Yes, we can.
Okay, thank you. So if the tax people come to your company now and this, okay, we want to check your record, we want to do your audit, we need to check out your computer system to look at the accounting system you are using, we want to look at how you keep your record with your automation, and you say no, you will not give them access. That act attracts 1 million naira penalty for the first day. Then each subsequent day that you deny them, then you'll be paying 10,000 naira. Then we are required to deduct some taxes at source. If we are paying contractors, if we are paying service provider money, we're supposed to deduct withholding tax where the transaction attracts VAT. Okay, it's withholding tax, VAT we pay it together to the contractor, is the one that will now remit it to the tax authority. But withholding tax specifically, you are expected to deduct any transaction that attracts withholding tax. Some attract 10%, some attract 5%, some attract 2.5%. As you are making that payment to your service provider or to your contractor, you're supposed to deduct that amount of tax, that withholding tax from the payment. You deduct it and you remit it to the tax authority. Failure of you to deduct attract 40% of the amount not deducted. If you are expected to deduct 100,000 as withholding tax now, and you didn't deduct it, you pay everything to the contractor, then the tax authority will charge you 40% of that amount. 40% of 100,000 is 40,000 naira. If it is 1 million, it's 400,000 naira. If it is...
Sorry to cut in, Mr. Ogumbi.
Okay.
Please, can you turn on your video? I don't know if that is possible. If it won't affect your network or something, if it's not going to affect the quality of your network.
Okay.
Is it possible?
To do what?
Is it possible to turn on your video?
My video?
Yes, we can't see you. We can only hear you. Yeah.
Okay. Okay. Can you see me now?
Yes, we can.
Okay. Thank you very much. So like I was saying, that you are expected to deduct VAT, withholding tax at the appropriate rate from your contractor or from your service provider. If you don't do that, you pay 40% of the amount that you are expected to deduct. If, for instance, you are expected to deduct 100,000 as withholding tax from that payment, and you didn't do that, that means you'll be paying 40% of it, which is 40,000 naira. So we need to take this into consideration. Then that amount, that whatever tax that you deducted from your service provider, you're supposed to remit it to the tax authority. If you don't remit it, then you pay 10% of the amount not remitted as administrative fee penalty. Then you pay interest rate at prevailing CBN monetary policy rate. Or you go into prison for 3 years. So that's the penalty. So then another penalty is non-compliant with information request. If the tax authority requests for information from you, they request for your document, they request for your transaction for tax purposes, and you refuse to give them, then you are liable to penalty between 100,000 and 1 million naira for the first day, then 10,000 naira subsequently. Then now, for those of us that are into virtual asset service businesses like cryptocurrency, those of us that are into cryptocurrency, we are expected to file returns with the tax authority monthly of all your transactions, what you earn, what you spend, and all those things. You know, ever before, virtual business, internet, all the Facebook earning, TikTok earning, all those ones were now captured in tax legislation before. But now, all those things have been brought into this new legislation, like cryptocurrency, like money you earn from Facebook, money you earn from TikTok. You need to disclose all this to the tax authority. So if you don't do that, and the tax authority inquire about it, they get to know about it, then the penalty is 10 million naira for the first month. 10 million naira. Then subsequent month, you pay 1 million naira. So those of us that are into cryptocurrency, we need to be filing this return in this new tax legislation. Then, as a business owner, if you want to change your office address as a business owner, then you need to inform the tax authority that, sorry, we are in Garki before, but now we are moving from Garki to Wuse. You need to inform the tax authority. If you don't do that, the first month you are paying 100,000 naira. Then subsequently you'll be paying 50,000 naira. So any other penalty, any other infraction that penalty was not specified on in the tax legislation, if you defaulted, is 1 million naira or imprisonment of 3 years. So those are some basic penalties that we need to take very cognizance of, so that we will not fall foul of the law. So now let's look at some changes in the Tax Act. So the provision of the Tax Act, some changes. We have, like I said the other time, we have the Nigerian Tax Act, we have the Nigerian Revenue Service Establishment Act, we have the Joint Revenue Board Establishment Act, and we have the Nigerian Tax Administration Act. So let's look at some of the changes in this legislation, one after the other. The Nigerian Tax Act, as part of the consolidated Nigerian revenue, the just promulgated Nigerian revenue law. One of the legislation in it is the Nigerian Tax Act. This act provides framework to align Nigerian tax system to international best practices and to address local economic realities. To give realities, there are some penalties in the whole act that will be charging you 100 naira, 200 naira, 500 naira. All those ones have been expunged, and they brought it to economic reality of what is obtainable now. So in the new tax act, we have one new definition of Nigerian company. You know, before, Nigerian company is any company that is registered in Nigeria with Corporate Affairs Commission. But now, this new act provides that in as much as a company is operating business in Nigeria, that you can verify that has economic significance and economic presence in Nigeria will be regarded as a Nigerian company, even if it's not registered with Corporate Affairs Commission. It will be regarded as a Nigerian company. So those of us, maybe we are agents to a foreign company that is not registered with a Corporate Affairs Commission, but have significant economic presence. Just let us know that such a company will be liable to Nigerian tax going forward. Then another one is the increase in the threshold of small companies. Before, small companies is defined as a company with a turnover of less than 25 million naira in the old legislation. But now it has increased this to a turnover of 50 million naira. So any company that its turnover is less than 50 million naira in Nigeria now is not expected to pay tax. That means you will not be paying tax going forward. But that will not oblige you from filing returns, especially the annual returns. Because you are not paying tax, you must disclose your income, you must disclose your expenses, you must provide your audited account for the year and file it with the tax authority. They will just assess you and they give you your tax clearance without paying anything. So in that case too, that means deduction of withholding tax is not relevant to small companies. You are not expected to deduct withholding tax because withholding tax in the first instance is not a new tax or a subset of tax. The withholding tax deducted is your money for you to use to offset your tax liability at the end of the day. So if a company is not earning up to 50 million naira, you are not expected to deduct withholding tax from those you are doing business with, but you have to file your annual return. Then the capital gain tax too. The threshold of capital gain tax has been increased from 10% to 30%. Before it is 10%, but now it has been increased to 30%. We all know what capital gain tax is. Capital gain tax is that tax that we pay on disposal of assets. If you sell your house, you sell your machinery, you sell your jewelry, because now it has been introduced to that if you sell any jewelry that is above 1 million naira, you have to pay tax on it. So all those things have now been increased from 10% to 30%. So why they did this is that to align the tax rate with company income tax so that there will be no arbitrage. If you sell property now and you are paying tax of 10% instead of 30%, and the company income tax is 30%, there is a kind of arbitrage. In order to close that gap, the rate of withholding capital gain tax have been increased from 10% to 30%. So the rate of tax, that's it. Then introduction of development levy. In the old system, in the whole tax law, we pay Nasene fee, we pay education tax, we pay technology development tax, we pay police trust fund tax. That is after the company income tax of 25%. We pay all those taxes again, maybe at 1%, at 0.5%. But now, instead of all those taxes, this new law has consolidated everything so that is what we call development levy. At the end of the day, you now charge 4% development levy instead of all these small taxes. So you pay development levy of 10%, company income tax of 30%, then development levy of 10%. There's nothing like police trust fund tax again. There's nothing like education tax again. There's nothing like Nasene tax again. There's nothing like IT information technology tax again. Everything has been consolidated to development levy of 4%. So as regard personal income tax, you know, before we have a relief allowance of 200,000 and 1% of your annual gross income. But now it has been consolidated, all those staggered relief allowance, independent allowance, children allowance, wife allowance, all those ones have been codified. So everything is now that any individual that earn 800,000, below 800,000 per annum, will not be paying withholding tax again. I mean, will not be paying personal income tax. That's PAYE. Will not be paying PAYE again. If you are earning anything less than 800,000, will not be paying PAYE again. So as a business owner, we need to adjust our payroll template to reflect this new tax law. We need to adjust our payroll template to reflect this new tax law, so that any employee in our organization that are earning less than 800,000 per annum is not we are not expected to deduct withholding tax, I mean, pay as you earn taxes from their income. They carry everything and go at the end of the month. And it has introduced a rate, progressive rate, that now the income earner will now be charged at least the highest level is 25%. You stagger the first, after that it's 100,000. Then the next 1 million, you charge 15%. The next, I think 3 million or 5 million, you charge 20%. Then anything above that, you are charged 25%. So the tax want to ensure that more is taken from the higher income earner and less is taken from the low income earner. Then we have zero VAT rate. There are some basic items that are exempted from paying VAT. We are not expected to pay VAT from those items, like basic food items, like medical and pharmaceutical products, educational and books and materials, electricity generation and transmission, excluding medical equipment and services, tuition fee, that's for education, then export products, excluding oil and gas. So all those ones, as a business owner, if we are doing business that is relating to all these ones, we cannot charge VAT and we cannot be charged VAT. Like now, maybe if you are selling books now, you can't charge VAT for those who are buying your book, and your supplier cannot charge you VAT for buying book from them. If you are in medical equipment and services, you are selling blood pressure machine, you are selling scanning machine, all those things, you can't charge VAT and they cannot charge you VAT. If you are selling maybe electricity generation in copy, like power, solar power and that, you can't charge VAT and you cannot be charged VAT. So those have been legislated as zero rated VAT. The importance of this is that, you know, you cannot charge VAT, but any other thing in your business that you are paying input VAT on, you can still claim them, despite the fact that you cannot charge VAT. Maybe some other expenses that are relating to your business in that regard. So that's why it is advantageous for us. Then for loss of employment or death of an employee, the exemption has been increased now from 10 million to 50 million. That is to say, you cannot pay tax on maybe you lost employment and they now pay you gratuity, or they pay you something for your exit, or you die and the benefit that are paid to your dependents after death, then formerly it is 10 million, but now it has been increased to 50 million. So any employment compensation as a result of loss of employment or as a result of death that is 50 million and below should not attract tax at all. So anything above 50 million is what will attract tax. So like I said the other time, personal jewelries now are subject to tax. If you sell your gold, if you sell your diamond, all those things, you have to pay capital gain tax on them. Before, it used to be maybe the threshold used to be 1,000 naira. That is to say, if you sell any personal domestic effect, like your gold and something, that is above 1,000 naira, you're supposed to pay tax on them. But now, the threshold has been increased to 5 million. How
Mr. Ogunbi, if you can hear me, we lost you very briefly, probably your network. Now you are back, but you are muted. Please, can you unmute, sir? Thank you.
okay, can you hear me now? Hello?
Yes, we can hear you now. Go on.
Okay. So the Nigerian Tax Administration is just to simplify tax system administration in Nigeria between the various tiers of government. So the tax authority may give guidelines on how to file return to the informal sector. You know those we call informal sector, the businesswoman in the market, because all those people too will be brought into the tax net. That's why they said you cannot operate bank account now with that TIN number. So everybody will be brought into tax net, and the tax authority will issue guidelines on how to assess this type of informal sector. So like I said the other time too, then for virtual assets, they will be subjected to tax going forward. So then the tax authority expect us as a taxpayer to notify the tax authority on any tax planning that we want to embark upon. Maybe in kind of, we see a transaction that will give us a kind of tax advantage. You need to tell the tax authority beforehand that this transaction I want to do, there is a possible tax advantage in it, so that they will be able to scrutinize that that transaction very well, to know that, okay, you are doing the right thing. So if you don't do that, there is a penalty for it. Then like I said the other time, there is an increased penalty for non-compliance. Now it is 100,000 naira as against 25,000 naira before for the first month, and subsequently 50,000 in every month. Then they have introduced this penalty for 5 million naira for our contract to individual that that are not registered with tax authority. Then now we have FIRS before, we have state internal revenue, we have local government authority tax, tax authority. So as a business owner now, maybe before, if they want to do tax audits, only the federal inland revenue will come and do their own. Some other time, the state inland revenue will come and do their own. But now, you may be seeing them in your premises. You will see the officials of FIRS. You will see the officials of state internal revenue. You will see officials of local government. That's what they call joint audit. This new legislation now provide that the tax authorities, irrespective of the tiers, they can come together to your company as one and do the audit together, so that there will be collaboration between them. Instead of doing this separately, they will do it together. The state will look at area that concern them. The tax, the FIRS will be looking at their own. The local government will be looking at their own. So you may now be seeing them conducting joint tax audit in your premises instead of them coming individually before. So then currency of tax payment. You know, when this new tax law started, there was a proposition, because earlier before, even in the whole tax system, it is the currency of transaction that you pay tax in. If your transaction was done in dollar, you have to pay the tax element of it in dollar. If it is done in pound sterling, you have to pay tax element of it in pound sterling. If it is done in naira, you have to pay the tax element of it in naira. But when they are formulating this new tax law, there was suggestion or opinion that everything should be paid in naira, especially because of the pressure we have on our foreign exchange, that everything should be paid in naira. But at the end of the day, they still retain that old legislation that transaction tax should be paid in the currency in which the transaction is made. So this one is still what the old tax system say, and they still retain it. So those are some changes that are before we have Federal Inland Revenue Service Establishment Act, but now that has been abrogated. What we have now is Nigerian Revenue Establishment Act. It's a new federal body that is responsible for administering and accounting for all taxes and revenue under the law enacted by the National Assembly. Any tax, either custom duty, before we have all type of agency are collecting taxes. Custom is collecting, some other MGA and so are collecting taxes. But now it is only the Nigeria Revenue Service that has that power to collect tax of any kind that is established by the National Assembly. So all those custom duty and so on, the custom will not have responsibility of collecting taxes again. It is the Nigerian Revenue Service that will be collecting all those taxes going forward. Then the collection proceed. What the Federal Inland Revenue Service before, what they get as proceed for collection, their own bonus that they get, I think it was 1% before, but now it has been increased to 4%. That whatever revenue, whatever tax they collect at the end, they are entitled to retain 4% of it as cost of collection to them. That's the Nigerian Revenue Service established. That's what the Nigerian Revenue Service Establishment Act says. That the Nigerian Revenue Service collect 4% of taxes that they collect at the end of the day. Then assistance in tax collection. the Nigerian Revenue Service can assist the local government, the state internal revenue to collect their own taxes. Maybe they come to your office now, they come and do tax audit, and they discover that you are not remitting the payee, or you are not deducting payee, or you gave you gave contract to venture or business names, and you didn't deduct withholding tax. By the time they come across that, it is within their jurisdiction now to assess you on those taxes that are due to state government, that are due to local government, and collect it on their behalf. So they have that power now to do that. They can do that, and they can assist all those tier of government in collecting their taxes. So that's that. Those are the small changes that are prominent in Nigerian Revenue Service Establishment Act. Then we have the Joint Board Revenue Establishment Act. So, before we have the Joint Tax Board, but the Joint Tax Board do not have the enforcement power. They don't have the enforcement power. They only have the administrative power to coordinate taxing activities among the tier of government. But now, the Joint Tax Board has been abrogated. We now have what we call Joint Revenue Board. So, in addition to coordinating that tax activities among tiers of government, they now have that power to enforce the law, to enforce what the law says, the compliance that you are required to do. They have that power now. That's what distinguishes them from the old thing. So thank you very much. I think I will stop here for any question or anything whatsoever. You are welcome. Hello?
Thank you very much, Mr. Ogunbi. This has been very much enlightening. Please, if you are on this call and you have gained some value, you've gotten something that you think it's helpful, please can you raise your hand? Just signify by raising your hand, and let's see how many of us have gained something. Okay, one person. Okay, this is some kind of feedback for the speaker. So let's do it. If you have gained anything at all, can you please signify by raising up your hand? Okay, thank you. Okay, so I know a few of us do have questions, and definitely this time, but so far I think I've only seen one question so far, and I will be reading it out on behalf of the person who is asking the question. So the first one that we had was someone that asked about all the penalties, if all the penalties can be posted for us in a table or something. So I posted it on our group right now. So everything, all of those penalties that they talked about. So we now have it on the group, so you can check it there. So, but the only question that I think I have here is that, Mr. Ogunbi, this is a question for you. This person said, is there any tax on pension or pension received through annuity investment? I think you've already answered that while you were speaking. So, but maybe you can take 1 minute to maybe about 30, 60 seconds to probably buttress on it for the sake of that person. Thank you.
Okay. Like I said, in the whole legislations, any emolument that you receive as a result of loss of employment, as a result of death, or in respect of annuity investment, if it is above 10 million, you have to pay tax on it. But now that threshold has been increased from 10 million to 50 million. So if you receive anything on employment loss or as a result of debt that was paid to your beneficiaries, then you are not expected to pay tax if it is 50 million and below. But if it is 50 million and above, then you have to pay, they will assess tax on it for you. Thank
Okay,
you.
so is that some kind of personal income tax, or what kind of tax will the person pay on it?
It will be personal income tax because it is personal emolument.
Okay, sir. So another question I have here, probably before we close this session, is someone is asking what tax is charged on virtual assets. Well, I'm not sure what the person means by virtual assets. But maybe you understand the question better.
And virtual asset is all those transactions, digital transactions, like cryptocurrency. Sure, you understand? Those who are trading in cryptocurrency, those who are earning from Facebook, those who are earning from TikTok, those who are earning from Instagram, from YouTube, they have to pay tax going forward. Those are the things that they call virtual assets. And the tax they will assess them on is company income tax. So, like I said the other time, you need to file your return on monthly basis to the tax authority that, okay, from this cryptocurrency business I'm doing, this is what I earned, this is what I spend, and this is my profit. So it is that profit that you earn from your cryptocurrency that they will charge you 30%, which is that rate of company income tax. That is what they will charge you on it. I hope it's clear.
Yes. So
Okay.
invariably, everyone that is involved in such things now need to register a company also.
And no, you don't need to register a company. You file on because you are trading maybe in your name. You are trading in your name and you just have to file your return in that your name, the name you are using. Because if you register a company, then that is a different thing entirely. That means you have to come in as income. But since you are trading as an individual, if you are trading as a company, you file your return in the name of that company. If you are trading as an individual, then you file your return with the tax authority in the name that you are trading with online in that name. So the tax authority will now assess you based on the deemed profit that you made from that transactions.
All right, thank you very much. I had said earlier, if you were with us last week, that this issue of tax or the new tax climate in Nigeria, a lot of people are interested right now because people now know that, okay, maybe the government wants to take it serious now. We cannot escape anymore and things like that. So a lot of people are now interested. But I want to say to everyone on this call that, it is one of the thing I have found with business owners, in my years of practice as a consultant, is that many business owners are not interested in knowledge. They are not interested in studying, and the truth of the matter is, if you want to make progress, if you want to do business beyond just feeding yourself, if you want to do serious business, you need to, uh, excuse me. Okay, yeah. If you want to do business beyond the surface level, you want to um, do business at a high level, and even if your business is small now, you want to push it to the next level. You want a business that can grow, that can scale. You need knowledge. So the first thing I want to say at this point is that everyone should know that that's one of the reasons why we have an ongoing series of webinar on this tax issue. So last week was one, today is another. Most likely, subsequently, in a matter of less than a week from now, we are going to have another one. So I want to first of all announce to us that you need to be prepared to understand this thing. All right, you need to understand it because I don't know how many of us saw the the fact that when he was saying all of those things, they actually look complex to a person who has not been familiar with paying taxes or anything accounting before. All right. So you need to make up your mind that you want to understand this thing. That's like the key point I think I want to give to us right now. You need to make up your mind that you want to understand it. So there are a lot of things to study. There are a lot of questions to ask. That is the first thing. But as overwhelming as everything sounds and seems, so this second part that I am going to be talking about over the next few minutes, we are looking at, of course, he mentioned it when he was speaking as well, but I want to bring it out in a very clear terms, because one of the things that we are supposed to be looking at in today's webinar is a basic checklist, compliance checklist. What are the practical things? If I ask us now, you will find out that many of us, or many of the people on this call who have businesses, have not been paying taxes before now. And so every one of us, one way or the other, has issues with compliance. And all of those issues has to be corrected before January. At least you have to position yourself towards compliance. So one of the things we said we are going to be looking at today are checklists. What are the things that you need to start looking at, to need to start putting in place before that time comes? Last week, I did mention about walking into the tax net voluntarily. And there is a terminology like that. And so I'm going to be running you through a few steps that you can start taking if you've not been compliant, so that when that time comes, when January 2026 comes, your business is not going to have any issue. So the first thing, before I go into that, I want to tell you that we need to eliminate all of this fear about tax. From a poll we did on the WhatsApp group, we saw that almost everyone has one concern or the other about this tax issue. For some people, it is the fact that, oh, why should government take our money? What are they going to give us back in return? For some people, oh, this thing is actually looking complex. I don't even know how to go. But from that poll, we saw that no single person actually picked the option that they don't care. So which means one way or the other, everybody is already thinking about this thing and how it's going to affect them. So now, the first thing I want to run through very quickly are the practical checklist for you as a business owner that you need to get in place between now and January. So number one, you need to register your business if you are running a business and you are not yet registered. So you can register as a business name. You can register as a limited liability company. Today's webinar is not for looking at the differences between the two. Of course, they have their pros and cons. So, but probably in the subsequent webinar, we are going to be talking about those ones. Now, you need to register. That's the first thing. And then, of course, upon registration, you are going to be assigned your tax ID and all of that. So you need to register with, he mentioned it, Mr. Ogumbi, he mentioned it earlier, you need to register with the tax authorities. There is nothing to be afraid about. In fact, one of the things I mentioned last week is that I have spoken with some of the inside persons in the tax, the tax system, and I I was able to understand that the intention of the government around this whole new law is not to winch hunt anybody. All right. The government just want to make it easy. They are trying to, like, if you use the word woo people, they are trying to attract people. They are trying to encourage people to join the taxpayers. And that's why they've done a lot of, if you go, I'm going to be dropping a website, the tax reform website. I'm going to be dropping it on the group chat so that you personally can go there and probably look at their intention, all of the education content they've provided on they even did videos to explain what should people expect, some of the misconceptions people have, and things like that. It will do you a lot of good to look at those things, understand them as much as possible. So walk up to FIRS, the states, register yourself as a taxpayer. There is nothing to be afraid of. And I want to say that that's one of the reasons why Ledgerly is here. So I will soon get to that. The next thing that is very, very important is open a business account. I know too many business people who are using personal bank accounts for business collections. That is very, very wrong. In fact, it is not only wrong because of the tax issue, it is wrong because you will not be able to really know how well your business is doing when your personal finance is mixed with that of your business. So it's not a good position to be. But even if you didn't have any reason to separate the two before, now that we are talking about taxation and the fact that everybody has to pay tax now, then it is in your best interest to separate the two. Separate your personal finance from your business account, business finance. So if you don't have a company account, in fact, the truth is that you don't need to do anything big to own a business account right now. Companies like OPay, like MoneyPoint, like Flutterwave, they've democratized all these things. You can open a business account within seconds and have an account that people can pay to that has your company name and all of that without even leaving your house. Okay, so again, that's not a topic for today. Probably we'll look at that some other time. So, but the key issue here is you need to have an account for your business that is separate from your personal account. So I cannot overemphasize that. Now, the next thing here, just a minute, please. Just a minute, okay. So the next thing that I want to say is important for you to start paying attention to right now. We are talking about things to start doing right now. Things that cannot afford to wait until January. Things that if you wait until that time, it will be too late already. Okay, so you have to start. All of these things I'm mentioning, they are now issues. They are not future issues. So the next thing now is start keeping proper records. The key word here is proper records. Start keeping proper records because if you don't keep proper records, if your record is not straight, if your record is not proper, you will one way or the other get into penalties, and eventually you are going to end up paying more to the tax authorities than you should pay. So have your records in place. Again, that's a subject of another subject entirely on its own, but today is not meant for that. So let me just, so that I won't diverge. So let me just continue. So start keeping proper record, track every sale and expenses, keep receipts and invoices. So before you buy this, you buy that, you don't even bother about collecting receipts. Now you need to collect your receipts. If you are buying fuel, for instance, and it is to power generator in your business premises, most filling stations have receipts. It is because you've not asked them that you didn't know that they have. So ask them to give you a receipt, because all of these are going to be very, very important, as time goes on. Okay, you do business with people, keep the invoices and all of this. Start keeping your records. That is the next, the other point that is very important. Now, the next point, which is number 5, is that know your tax obligations. Tax obligations are different from person to person, from different businesses to different businesses. Some people, it is, for example, if you run a a sole proprietorship business, there are tax obligations that you have different from a person that is floating a limited liability company. So you need to understand all of this tax. It is not, yes, Mr. Gumi has mentioned a lot of taxes that are now that are coming now with the current reform that we've been talking about. But that doesn't mean it is all of them that would apply to you. Depending on the kind of business you float, depending on the volume of transactions that you do in your business, I mean, your volume of revenue and things like that, that will determine what type of taxes would be relevant to you and the ones that won't be relevant to you. So you need to know all of those things and prepare for them. For example, VAT is relevant to you if you are into goods and services and if your revenue is above 50 million naira. PAYE tax is going to be applicable to you if you are running a business and you have staff. Of course, I think there is also a threshold for that. And then the CIT, which we call the company income tax, is going to be applicable to you if you are running a limited liability company. And of course, there is also a threshold for that. So all of these three taxes I have mentioned, understanding these three alone has brought you to about 80% compliance. All right. So now the next thing you need to do is set reminders. Set reminders. Tax obligations or filing, they are not things that you forget. You have had all of the penalties that were mentioned. You know, how much profit are you making in your business to start looking for that kind of trouble? So set reminders. VAT is monthly if that applies to your business. PAYE is monthly if that applies to your business. Company income tax is annually. All right, so we need to understand all of these things. Then have a system for self-audit. You can have a way you audit your own account even before you are due for remittances to the tax authorities, so that if there are any issues with your account, if there are any loopholes with your account, you will have identified it ahead of time. You know, that's a very, very key thing to take note of. And then number last, which is where I would stop on the checklist because of our time. It's already past 5 p.m. So seek help where it is necessary. Of course, it is going to be necessary for most people because the basis of correct tax remittances is accounting. All right. So don't try to want to figure out everything on your own, especially if you don't have accounting background. Even if you do have accounting background, I do know that many people who are into business and they know about accounting don't even have the time to do all of these things themselves. So the best they can do is to hire someone who is an accountant to do all of these things for them. And then maybe some people use software and all of that. So, but software alone cannot even get the job done. You still need some human hands to work on whatever your software gives you at the end of the day. So now that moves me to talking about Ledgerly analytics and what we do and how we try to help you reduce all of these burdens. The first thing that
hello, Mr. Ledgerly.
Hello.
Hello. Please,
Yeah.
Before you go forward, let's just me chip in one thing.
Okay, go ahead, sir.
As regards registering with the Corporate Affairs Commission, I will advise that we should register as limited liability company if we want to, because if you register as business name, you will now be, irrespective of your income or the profit you make from there, you'll be subjected to tax. But if you register as a limited liability company, since the threshold is has been increased to 50 million. So any business, any side hustle that we are doing, or any small business that we are doing that can fetch us turnover of 49, 48 million, and it will not be taxable, I think it's better than to register as business name. By the time you make 1 million or 500,000, you have to be subjected to tax. So you can take advantage of that threshold and register as limited liability company. The only challenge that will be there is that it will now place on you a additional responsibility of filing returns. You have to prepare your account at the end of the year and file returns. You have to file your VAT where applicable. So that is the only thing. But I think to take advantage of that threshold, it's better to register as a limited liability company.
Yeah, that's very correct, sir. Thank you very much.
Then secondly, someone asked that out of the civil servants that are doing side hustle, does it mean they will be taxed? That will be double taxation. You know, even in the old law, the position of the law is that any emolument that come into you, irrespective of where it comes, in as much as it's not a kind of reimbursement, should be taxed. So even in the old law, you are expected that whatever income you get from your side hustling, you're supposed to disclose it to the tax authority. It's just that they are not enforcing it. But going forward now, which shines light on our bank accounts, all those things will be brought into the tax net and you'll be charged tax on it accordingly. Thank you.
All right, thank you very much. So this is Emmanuel Abimbola, I will just answer your question right away. So you have heard what he has said. In fact, that's one of the things I did mention last week, that you are better off registered as a, so for you, you register your business last week, you can upgrade your registration to limited liability company. So this gives you, so what that means is that if you register as a company, you have some threshold opportunity that has been made available to play around with, such that until you start making 50 million and above, you won't be subjected to tax. But if you register as a business name, the government sees your income as not as a company income, as your personal income, and then you are going to be subjected to personal income tax. And of course, there is no threshold for that. So whether it is 100,000, whether it is 10 million, you will pay tax. So that is what. So now, very, very importantly, I was talking about what Ledgerly does and how we try to help. This whole thing looks overwhelming. It looks complex, but it doesn't have to be. All right, it doesn't have to be. Yes, you are welcome. It doesn't have to be. So what Ledgerly does for you is that we make record keeping so easy for you, as easy as using as chatting on your WhatsApp. So Ledgerly is a tech company, and at the core of what we do is compliance management, and we help you keep data of your business, because data is very, very essential to growth. Data is very, very essential to this tax issue we are talking about, because when the authority comes, what they are interested in is your data. And when your data is not in place, or it is not coherent, then there will be trouble. All right. So at Ledgerly, we have a system that we are building that will simplify all of this issue around business data and business finance. So you don't need to learn complicated software. All you need to do is chat us, and we made it basically a WhatsApp friendly issue, such that anybody will be able to use our service. What that means is that even if you are not educated, if you know how to use WhatsApp, then you can have all of your business records, straightened out, and then you can move forward from there. Then if you subscribe to Ledgerly, you have your financial financial statements, financial summaries at the end of the month, and then calculating your tax, your tax summaries, the compliance document that the authorities are actually looking for, which is what all of the things that you are required to submit as the part of the filing process. These are some of the things you will get. And this is like, consider it like you're outsourcing your finance department, the finance department of your company. Instead of hiring an accountant and you're paying 150,000 every month, well, it's not a bad idea, but you now have an opportunity to have everything an accountant can do for you and more, because this is not just accounting, it's analytics. So you have everything an accountant will provide and more for as low as 10,500 naira monthly. And that is inclusive of VAT, right? So this is what we do. And then if you work with Ledgerly tries to streamline your business records in such a way that anytime the government or any other body needs something from your business that they can make sense of, we can provide to you at the tip of your finger. And then, apart from the tax issue, there are businesses that want to scale. What you are doing is something fantastic, a very brilliant innovation that you are doing within your business space. And then you are looking for funding, or some people are even interested in what you do and they say, oh, come, we have money that we want to invest and things like that. So if you don't have data that makes sense, it will be difficult for you to get finance. It will be difficult for you to get investment. Investors are looking for data. Investors are looking for your records. They want to see how much of progress. And you can't measure anything if you don't have data. You can't measure anything if you don't keep proper records. So this is where Ledgerly comes in, and that's what we do. So at the end of this call, I'm going to be posting our services and different plans that we have, and you see which of these plans is applicable to the kind of business that you run. And then automatically Ledgerly helps you separate your company finance from your business finance. So that's something that's also very important. And then we give you access to reports. When we talk about reports, we are talking about so many people are running business blindly. Imagine you are driving and then you are closing your eyes, or you are blind. That's what many people are doing with their business, because they don't know. Yes, they know money is coming in, but they don't even know whether they are making profit. They don't know whether between 3 months from now and 3 months past and 3 months forward, they don't know whether the business has moved forward in terms of performance, or the business have moved backward. Why? Because they don't have any data that they are working with. And for such businesses, okay, I will tell you this, that I know people who are doing business in billions. I've had to work with some of them, and they know money is coming in. They see the money in their bank account, but they are losing money in so many ways that they don't know. Staff are stealing things. Uh, so many things are missing, and they are not even aware. Why? Because they don't have data. They don't do inventory. They don't do many things within their business. So these are some of the things that Ledgerly does. We help you block leakages in your business. So at the end of the month, or at the end of a quarter, you are able to see reports that show you exactly in layman's term what is happening within your business. What are the decisions that are necessary for you to take right now? Reports that can help you take informed decision within your business. Know what kind of step is required for you to take right now. And many people don't have this, and that's why they go bankrupt, because things have been happening for months and they didn't even discover. All they know is that, oh, money is coming in and things like that, but things are getting lost in the background and they didn't know. So this is very, very important. So speaking of report and records and data, it goes beyond tax. Some of the reasons why you need to do all of this, some of these things we are talking about, is beyond the taxation. And then if you get your data management, your records management right, it can actually help you to significantly reduce your tax liability and tax burden to the government. There is a way it can be done in such a way that you will be fully compliant. You pay, because what I know many people are worried about right now is how will I be paying so much money to the government? How much am I even making as profit and things like that? But you can work with experts. So we have experts that are working in the background, and of course, we are building an AI-enabled technology system that helps you to simplify all of these things. So if you have companies that you have staff, we help you simplify the payroll issue. You don't need to do anything complex. All you need to do is little things that we are going to ask for, send them on WhatsApp, and you are good to go. All right. So then if you have business that has multiple branches, or you run a business that operates multi-currency, what that means is that you run a business that you have clients from different parts of the world that pay you in different currencies. We help you simplify, your accounting process. We help you straighten out your business finance, and that is what we offer. So what we believe in is that you should be able to focus on growing your business while we do all of the rough part of the job for you. So that is what Ledgerly is all about, so that I won't be taking your time. So before we round off here, I want to make an announcement that I've within the short space of time that we have right now, I have given you a little bit of information about Ledgerly, but I want to announce that we have different plans. Our basic plan, which is what we call the OSU plan, is the 10.5 per month. The growth plan is 25,005 per month. And then we have other higher plans, which, like I said, I'm going to be posting on the group earlier. So all of these are plans. For everyone that is attending this call today, we are giving you 20% discount on any plan that you choose. That's not the only thing that Ledgerly does. We help you also, if you want, we can help you do your filing. We can help you register your business, all of the CAC filings and all of that. We can help you manage all of that, such that you won't even need to worry about running into any kind of issues with the tax and the regulatory authorities. So, and again, you are going to have access to information that, for example, if you are looking for loan from bank, you want to take loan, why many people's loan application gets rejected is because they don't have convincing data to back up their loan application, because even if it is grant, even if it is grant or loan, the authority, the body that is allocating or giving that grant or giving you that loan needs some form of records. And if you don't have it, they can't trust the fact that the money they want to give you, you are not going to waste it. So these are very, very important issues for anyone who is serious about running business in Nigeria as of today. So all of these discounts, we have the monthly plan. If you want, you can pay every month. And if you want, you can choose the annual plan. On our annual plan, you save 2 months. So if you are paying, for example, if you go for the OSU plan, which is 10,500 naira per month, you can compare that to paying an accountant every month, and yet you still get more than what even an accountant can give to you. So if you are going for the annual plan of OSU plan, for instance, you are going to pay for 10 months. So we give you 2 months free of charge, and that is on top of the 20% discount I announced earlier. If you are registering, if you are participating in this call and you are registering between now and this weekend. So all of the links that you need to make your registration, you want to register a business, you want to upgrade your business from business name. All you need to do is send us a WhatsApp message. That's all. That's our interface for interacting with you. And then we are going to give you information about what we need from you and then how to make payment and all of that. So very, very straightforward and simple. So right now, I know our time is fast spent. Okay, so on all of the issues I have addressed in the second part of this webinar, if you have any question, so this is what I think I want to do. I want to take one or two questions right now. So if you have a question, so I want you to just unmute and ask if there is any. If there is none for now, you can probably post your question on the WhatsApp group. Is there anyone on this call that you are not on our WhatsApp group? You can signify by raising up your hand so that. Okay, someone is asking a question. All these remittances, what benefits are Nigerians getting from the government? I believe that there will be some form of benefits as stated on the financial reform website. But the truth of the matter is, I think you should not focus on, if I were you, even though it is something to be expected, or it is your right to ask for it, that, okay, if I'm paying tax, what will the government do for me in return? It's a very valid question. But if I were you, I wouldn't focus on that. There are many things we have talked about, this is an opportunity for many people to structure their business, to straighten out many things. People like big companies like MTN, like Dangote and things like that, they've been paying taxes for years. They are not just, but they are not complaining. So if you really structure your business, it will be easy for you to scale. It will be easy for you to make progress. In fact, some of us will find out that this new tax regime will actually favor us more than all of the years we've been running business, that we have not been, we are running business without structure. Now everyone is now seeing something that will force us to structure things, to structure our business, manage our finances well, and things like that. And at the long run, many of our businesses will actually be better for it. So rather than focusing on what will the government do in return, I think you should rather focus on other benefits that you will get from putting some of these structures in place. And then if you do it correctly, whatever amount you are paying to the government in tax is not even going to be anything compared to the value that you will have derived from cleaning things up within your business. So I think that's the way I would like to answer that question. So if anything good now comes from the government, from the tax you are paying, then all well and good. And then, of course, we want to trust that we are going to have that as well.
All right. Sorry about that. So I believe we can hear me now, please. I want to be sure you can hear me right now.
Yes, sir, I can hear you.
Okay, so that is the way I would like to answer that question. I believe that has answered that question for the person that is asking. So before we go finally,
hello, sir.
I want to say that
hello, sir. Hello, sir.
We should take advantage of what we are talking about here right now, because it's a big opportunity. So we are going to be doing subsequent webinars for business owners and different things that you can learn from, that you can leverage on to move your business to the next level. So you can take advantage of the 20% discount and also the annual payment that gives you 2 months off. So all of that. But if you want to test out what it looks like, you can start with the monthly plan. That is good enough. And you are going to experience so much peace in your business. And at the end of the day, I'm sure you will be happy about your decision. And finally, in this early stage of Ledgerly, we are also partnering with people we know that your network is your net worth, like they used to say. So many of us on this call, businesses, people who are running businesses and need all of these things that we've been talking about. So you can refer them to us and get some form of commission as well. So all of these things are things that you can chat us up, and we are going to give you specific information. Our website is going to be launching on the 1st of October. So let's look out for that coming up. And then when the website launches, we'll be able to do most of this. You can choose between anything you want to do with Ledgerly. You can do it from our website, or you can simply chat us up on WhatsApp, whichever one you think is more convenient for you. Okay, thank you very much. Any question before we wrap up? This is 4 minutes before 5:30. I think Mr. Ogumi, you want to say something?
Yes. Thank you very much. I just want to add to what you've said on government not doing anything about the taxes we are paying.
No.
Hello? Are you hearing me?
Yes, go on.
I say I just want to add to what you have said about government not doing anything about the taxes we are paying. Like you said that, we don't need to focus on that so much. I want to add that more so, you've seen the penalties for non-compliance. And after government, now government. If we fall victim of this non-compliance, it will affect our business very adversely. Paying a fine of 10 million, 1 million is not a small thing. How much profit are we making? So it is better we focus on compliance. Then we'll be able to have that mouth to demand for accountability. And we continue to trust that government will do the right thing at the right time. So please, let us focus on compliance in order not to fall victim of those penalties for not complying. By the time we say government is not doing anything, we will not pay. By the time they come and the hammer is on us, we cannot fight government. So just let us try and do everything and trust in God that things will be okay with the government. Thank you.
Okay, thank you so much. Thank you so much. Our time is already fast spent, so we will just end the call. We are expecting you to chat us up. Our Ledgerly has just one official number, so if you want to write it down, I can just call it out for you right now as before we close. But if you are already on our WhatsApp group, most likely that number is the same number that has been interacting with us on the group most of the time, even though there are other numbers, but majorly the number that posts on the group is the Ledgerly official number, and that's 081 1215 4432. I'll take it one more time, 081 1215 4432. So chat us up and let's begin from somewhere to begin to put things in order within our businesses. So thank you very much for joining us today. We thank you. We'll be announcing our next webinar very, very soon. All right. Thank you very much. Bye for now.